Hello everyone, this is Juan Sarmiento and today is Thursday, April the 15th. Okay, let's go quickly through our current positions to make sure that nothing needs to change. Let's go alphabetically, current account, and let's go analyze. And we can, oh, look what I'm doing here. I'm doing a roll up. And with a roll up, I go from a delta positive to delta negative. And do I want to do that? Perhaps not. Perhaps yes. I want to do it because the stock has shown weakness. It looks like it's going down by the stochastics. Let's take profits. And I'm taking $22.20 for that one by rolling up from 275 to 310. Make sure that you only do the outstanding calls. And what I mean by that is the long call minus the short call gives you the outstanding call. In this case, 1, 2 minus 1. Confirm and send, and let's do that. And that should fill before the end of my trading day. Intel is already very delta neutral. In fact, it's delta negative. Let's take a quick look at the chart. Yeah, I think it could go still lower. The stochastics pointing down. The Ichimoku cloud is down here. Earnings are coming up. And let's take a look. We have April the 16th. That's tomorrow. Let me show you what I do when we are very close to expiration and your puts are way out of the money. See that? 57.5 versus 65. That's way out there. So we're going to do the rollover of the call, analyze rolling. And let's go to May sometime. May 21st sounds good. Or May 14th to make it 29 days. Just doing that makes my deltas positive. But in addition to that, I want to sell puts. Let's go add simulated trades. Go to the same expiration, which would be May the 14th. Same strike price, which will be 57.5, and then press the control key and click on the bid for the put, and that adds one put. Well, we can do 6, couldn't we? And I explain that in a minute. The 6 puts, April 57.5, here puts, they would expire in all certainty tomorrow. Okay, you can wait until tomorrow to do this so that you're not running the risk that the stock drops overnight 30% or something like that, ridiculous like that. But when you do that, if you do that, look at what happens to my risk. It becomes unlimited to the downside. So you're taking a risk when you do that, okay? But if I did it tomorrow, that'll be great. Okay, so let's do the call side only for now. Analyze rolling. That was my Facebook trade. And let's say May 14th. There you go. That's 47. Let's do the call side first so that I end up with no, if the stock goes down significantly, that's a win, not a loss, okay? Confirm and send. Then tomorrow or when the market opens, you can sell the puts. Say analyze closing. And really we are selling. Sell 6 puts, and the expiration should be May 14th. And that's 46 cents. I'm not going to run the risk of making it unlimited to the downside. We can wait until tomorrow. At the opening we see, well, is stock going to drop 30%? Yes, no? If not, then you can do this. The reason we can't do that overnight because some bad news can come overnight and then we're really screwed. Okay, so the call side has already in process, it's already in process. And so tomorrow I could do the put side. Let's move on to lows. Okay, you can see that it's above my smiley face, so we can take profits here as well. Okay, we already have 190 calls. You see the calls here. Let's focus on the calls only. The puts can wait. We have May, 170 short calls, and we have here the call side as well, and they match. So that is essentially a calendar spread. Okay, but then I have the 190 call, two of them, and one short call. Okay, but the stock is trading at 204. Okay, so we still have one excess long call here, don't we? So we can roll that up, analyze rolling. Just one, roll it up, same expiration, but go up to 205. Make sure that it matches the same date. Oops, it doesn't have the 225, so we can do the 200. Okay, and then let's see what the whole trade turns out. Okay, so right now our deltas are 42. If I do this trade, they come down to 28. Hey, that sounds good. That's a profit-taking move. Okay, we can do that. We could even short lower a different date, as long as it is July, not, they should be before July 21. We can do the 200. Let's look at the ad simulated trades. And we have for May 222, 205 for May 14th. We could do that. What about the July? For July, we have 210. We don't have 205 or 202.5. You can always sell Junes if they have a different, no, same issue. So we can do this like so. So I'm going to do that. That's a way to take profits, leave my delta still positive, so that if the stock continues to rally, we'll be fine. Let's look at NUE. Okay, these again expire tomorrow. We can certainly do the rollover on those two and do the same, because they're so far out of the money. We can do the same as I proposed to do on, was it Intel? On Intel, yes, we could do the puts tomorrow morning. For now, let's just roll over the calls. And go to May 21st or May 14th. It's not showing up. That's not good. Okay. It doesn't have the 57.5. May 21st? No, it doesn't have it. It does not have, which is bad, not such a great thing. You can go to 55 just to make sure that is a credit, and then check what the result is. The question is still the same. Is it delta positive? Well, without it is -6. We turn it into delta positive 41. Is that a good idea? Perhaps not. Perhaps we want to keep it neutral. So, okay, how about if we went to 60? Then we have to pay for it, and the delta is still pretty high. So let's do this, okay? And we can always sell puts. We will sell puts tomorrow. May 14th. So tomorrow, those puts are going to expire worthless, but I can certainly do puts tomorrow with the same expiration. Okay, let's go to Texas Instruments. Yeah, set 175. It's the same idea. They're really out of the money. So let's do the call side only. And then tomorrow we add puts. Not today because we run the risk the stock drops significantly. Go to May 14. Yeah, I want to do that. And then tomorrow I sell the puts, understanding that this puts will expire. Or we can simply do the put side as a different separate rollover, like this, with May 14 as the put side. Let's do that, okay? That way I don't have to think so much about what happens tomorrow. Okay, that's the put side. The call side is still processing, okay? All right. Now, I have a couple of potential trades here to enter. Dell is one of them. Let's take a look. And then I'm going to show you how we're going to deal with that. How do we decide whether we want to trade or not? First of all, Dell is breaking up to new highs. In all likelihood, it could continue to go up, but chances are it could happen that we are just happen to catch it at the very top and it's reversing. Yeah, it could be like this. Big peak, comes down a bit and then rallies up, but we may be at the top of the market. Who knows? It's a possibility. Okay, let's see. Okay, let's go to the Analyze tab, Dell, Show All. Oh, I was copying the wrong trade here. Dell, here it is. Sorry about that. That's why I couldn't get it. Here it is, okay. Analyze trade, and let's take a look. Aha, so we have delta 33 for the put side is Vega 33 or volatility is 33, which is quite high compared to 24 short. That's not a very good trade because as soon as you take it here to my volatility skew, you'll see that it doesn't work. Okay, the front month is 24.37, 23.9, 7. And then on the long side, 29.81, 32.91. And of course that gives me minus, the difference is just too large. It shouldn't be more than 3% difference. So that's way too much. Then the liquidity, we have natural is 18.99 for the mid, and the natural is 21.69. That's very wide. 29.61. So you know that that's not good. So oops, I entered the wrong location. 17, let's see, 17.67, 29.43. No, 17%, that's just too illiquid. We're going to have a lot of trouble to trade this in and out. So I decided not to trade. I decide not to trade Dell. But we can keep an eye on it. Then the other thing is Goldman Sachs. And here's the trade. And let's put it here, paste it here. There is Goldman Sachs. Analyze trade. Oh, that looks better. Okay, so let's right away take it to our volatility skew on Goldman Sachs. So the front month is the one below. And here I put it in the front, which is always confusing. 26.34, 24.25, 26.96, and 25.87. I'm just copying it from here, from the volatility skew. And that is minus 1.2. That's acceptable skew. Liquidity, 49. Let me just open here. The mid is 49.53 and say create duplicate. And that is 50.85. 50.85, and that is acceptable, so we can trade by the looks of it. Let's compare their earnings expected versus analyze chart here. On the chart it would say, oh yeah, they reported earnings and it was 18.6 actual, 9.78 estimate, and I think I wrote it down already. Yes, 90%. That's a big beat of expectations, as you can imagine. And then the current IV percentile is way down here, is less than 2%. Let's go to the trade tab and scroll down. Current IV percentile 0 is at the very bottom. Current HV is 3. Great. So that is certainly a tradable trade. Yeah, we can definitely do this one. And the only question is, how many are we going to do? Well, at 49.70, we can't do 2 of them, can we? Because it will be more than 90. Let's see, 2. 99. Let me see. I could potentially do that because our current position, no, it's 89. So it's a little too much. Let's just do 1. Just the 1. Create duplicate, confirm and send. Okay, and I'm just gonna wait until they all fill, or I do something about it. Okay, so for example, here all I have to do is credit is that I asked for is 47, but the market is saying 40. So let's change that. Cancel replace, unlock it, and send it again. And got filled. Let's try another one here. The lows, again, my asking is a little bit high, so cancel replace. Try that until it gets filled. Don't feel too bad if it doesn't. You keep on lowering until it gets filled. Okay, I got that Goldman Sachs filled. Then we have here new 250 versus 270. That should fill. Here we're still asking too much. Cancel replace. Unlock it. Confirm and send. Okay, and then we just wait a couple of minutes. Let's take a look at the charts. Markets keep exceeding expectations here. All right. Okay, and I can keep an eye on that. I need to make sure that it does get filled. Right now is what I'm asking is at or below the market price, so that they too should get filled. In the meantime, let's check our SPY. And you remember I have 3 positions and I just increased that yesterday. Let's go to the account statement and you can see that I have $10.58. I have entered $1,500 and it's $1,525. So 25 is my profit so far. Okay, think about it long term though. All right, let's just try one more time to have those positions filled. Let's go back to the GeniTrade account. Okay, we can always reduce that. Cancel replace, let's reduce by 5 cents. And that should get it filled, I would think. And UE and Texas, let's cancel replaced as well. Texas Instruments, 1, 2, 3, 4, 5. Confirm and send. And I can keep on doing that until these get filled, but I'm not going to bother you with that. Suffice it to say, I'll try my best to get it filled. And then tomorrow, I see which ones I would sell puts for, okay? I'll probably make a quick recording of that, so just so you know. Even though I could do it today, I prefer to do it tomorrow, which is the day of expiration. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.